JB here, JB here. Hope everyone's doing outstanding. Thursday, September 18, 9/17. On this fine morning, post-Fed morning. Happy post-Fed day. Talk quick about the market. Some names I'm looking at go from their S&P futures up about 0.5%, NASDAQ up nearly 1%. So gaps everywhere this morning, although off the pre-market highs. And we'll see what today brings. Today is certainly going to bring more commentary around the Fed, right? What is the 0.25% cut? What does that do? What's the outlook? What about the dissenter? Stephen, I forget what his name is, the new appointee that replaced the one that had stepped down in August. He was the lone dissenter, was looking for a 0.5% rate cut. What is his role, or is the independence of the Fed, is that done, right? So that's some of it. And then, of course, well, this morning already just came through, right? Tepper, is he on CNBC, I guess? If anybody, David Tepper is one of the best, uh, well, has been for a long time. I don't know how his performance has been recently, but one of the more looked at hedge fund manager, owns the Carolina, I think the Panthers, right? So he talked, it says Fed risk danger if it cuts too much. I mean, that's like, it's pretty obvious. I mean, it depends on what boat you're in, right? If you're in the boat that rates are really high, housing market's struggling because of high mortgage rates, that the Fed should be cutting rates substantially, already should have, similar to what the UK has done, then it hasn't been too fast. It hasn't been fast enough, right? If you're on the other side, and I'm kind of like in the middle, right? I think the Fed should be kind of cutting rates a little bit, but not too aggressive, just because they're in a point where they can react to things, right? If the rates were at zero, like the 2008 when it was 2.5%, and then they started cutting the rates, it got it to zero, and then it's like, what do we do now? And then they had to come up with some financial shenanigans, purchase things, right? The mortgage-backed securities, all those things to stimulate the economy, right? You don't want to be in that situation. We saw what happened with COVID too. You don't want to flood the market. You don't want to flood the economy with free cash because obviously the inflation soared. So I think everything is in a good spot now. It's like, where does the market go from here? To me, it's just watching the yields, right? You don't want to see the 10-year go nuts, right? You don't want to see it to start to spike. And ironically enough, yields were lower after the Fed meeting. Fed statement and Fed meeting, and then as the afternoon progressed, yields started to tick up and went to the green. Similar here this morning, yields were in the red overnight. We're pretty much red till about 8 o'clock, and now they're starting to head back into the green. So something to watch. Don't want to be in a spot. And I remember looking back in like October of last year, and it was election year. You look and you're like, wow, yields, the lows of yields for 2024 was exactly the day that the Fed cut rates. So you just, hopefully that's not a scenario that repeats itself. Even if it does rise, it's not too much. We find some, I guess area that's as high as, four, whatever that is, 410, and yields went under, the 10-year went under 4% for the first time since April yesterday afternoon. So hopefully it just stays around here and starts to take lower. You already see news too. The mortgage applications at the highest levels in quite some time, and all those headlines will start hitting over the weekend. And all those folks who aren't traders, who don't look at the market every day or every minute or every hour, will see these headlines about rates coming down, yields, and then they'll be like the Sunday article. Is now the time to look at homes or not, to buy a house if you've been waiting, and then all those people start flooding the market. That's just how it works. So we'll see how things play out. So that's kind of the overall market today. 662 and change is the upper Bollinger Band. I think 662.99. We're at 661.94 here on the SPY in the pre-market. So maybe some chop here. Yesterday's trading range 1.1%. That was the implied move for yesterday was 0.84. So the market finally overshot that and broke out of its tight intraday trading ranges. We'll probably get back to that pending any crazy shenanigans. That's overall markets, that's yields. So now just individual names. And first, I'll just talk about the gold. I mean, if you've listened to my rants for the last 15 years, gold is not something that I look at in a bullish fashion, right? When I look at gold, I have my bear goggles on, unfortunately. If I had just probably back in 2014, I mean, it's taken some, if you look at the compound annual growth rate of gold since 2014, I mean, it's the S&P and all the other end that has well outperformed that, right? It's not the biggest mover, but could have got some later dated GLD 3,000 calls. Not that those strikes existed, but I look at through the lens of a bear, right? Because I just think at some point, like the reasons you hold gold are losing its relevance the longer we go. I mean, people can make that argument. I get it, right? But to me, I mean, that 2014, I was making a bear case on gold, and Bitcoin was one of those things. I don't think many people are talking about Bitcoin back in 2014. It just, I think there's just a lot of factors that just keep me from being bullish, right? So, and I always say I'm not saying that, if you have a portfolio, and I'm not a registered investment advisor, don't have a piece of gold in it, right? I just think there's opportunities. And when I look for opportunities for downside. So anyway, needless to say, I got those GLD puts yesterday. 3,700 looks like a key spot for me. And it got up to 3,705 just earlier, couldn't break through. Now it's ticking down a little bit. Overnight, GLD got all the way down to 334. So I got those strikes into next week, the puts. I might look at the October 310s. Those look interesting in the afternoon yesterday, but I'm like, I don't want to press my luck. Let me see some follow through, some confirmation. So if 3,700 looks like the top today, we don't get back above that, I might look for some more GLD October strikes, and then obviously scale some out on the way down. And I think doesn't mean the market has to go bonkers either direction for gold to sell. I just think there's an opportunity, right? And not only that, you have to think people, if they do have a portfolio of percentages, right? 5% bonds to 10% gold, 50% REITs, whatever it is. If gold being up 37% doesn't distort the weighting of your portfolio, you have to think as the year goes nears the end, they'll rebalance, right? So just that, and obviously that's not going to cause a sell-off in gold, but these are just things I think about. All right, so that's gold. Then individual names here, Reddit. I mean, I was looking better here in the pre-market, still at over 270. But yesterday, selling off with some of the other names, Plantier and some of these other momentum names were selling off in the morning. I was down over 5% by about 11 o'clock, broke under 250, and then boom, there's a report out that they're working on revamping their deal with Google, their AI deal, along with OpenAI. And the thing is, Reddit just did a deal with Google like a year and a half ago, and it was like 60 million for their data, right? And then they have a deal with OpenAI. And I think if you look at their filings, it's like 180 or 200 million of their revenues is just those contracts. And you have to think if they're working out another deal with Google, maybe they're leveraged, they have a better position because their data is so valuable that they're going to get a substantially larger piece for that deal, right? So maybe they're reworking. If to me, just the fact that news report came out is positive for Reddit. And then if it does come out and it's like $1 billion or $2 billion or whatever instead of 60 million, I mean, the stock's going to go bonkers. I think it goes bonkers regardless. So lucky enough, those premiums spiked. Even with the stock not going green yesterday, I was able to close the rest of my 300 calls for profits. They're weekly strikes, right? And there was 2.5 days left to expiration. We had the Fed meeting. I didn't want to be in a spot where those premiums just got destroyed. And then I went and rolled out to next week, and we'll see what happens here today. I'm sure my calls are in the green. If they get close to a double, I'll probably look to take some of those off and then get higher strikes, just because if FOMO takes over, it breaks over $300 to 340, 350s. All those are going to be up substantial. So that's Reddit. Continue to love that one for upside. MDB. I don't know. It's like, I don't know if it was last week. There's like 10. No, and I'm exaggerating. There's like 5 price target changes on Reddit this morning. Not Reddit, MDB, Oppenheimer, Guggenheim, B of A, Cantor, Barclays, Truist. So, was there news? Did they announce some stuff yesterday? It looks like they have news of new offerings that they're doing, but I don't know if that's uh, you know, a catalyst, a material news for the stock. But needless to say, it's been a great trade. Thursdays and Fridays as the premiums coming out of weekly strikes. Don't be surprised if I get some weekly strikes here on MDB. 340, I would think, maybe 345. So that's MDB. Lemonade, disappointing. I mean, I say disappointing. After the Fed statement, boom, all the way up to nearly $59, and then gave it back, and then some, closed down 2.6%. Put on the watch list. I'm like a glutton for punishment. So don't be surprised if I add some strikes. I'll probably be a little smarter this time and go with the Octobers and maybe some 70 or 75 strikes. At some point, it's like that AI theme. And, I'll talk about Duolingo in a second, but it's like there's names that have benefited from AI, right? And then there's names that have been destroyed because people thought AI was going to disrupt them, right? And Reddit's one of those names that was proven wrong. Google, and Lemonade's one of those names I think hasn't really taken off as AI, one of those names that I think is a pure play on AI just fitting that sector, and Lemonade disrupts it. So, all right, so that's Lemonade. GameStop's 8-session winning streak came to a halt yesterday, just barely. I think if the market was open another 10 minutes, it would have made 9 straight days to the upside. Still looking a lot to add some more strikes. I keep saying I'll lock some of the Octobers in to cover costs and add some higher strikes. Excuse me. And then Duolingo, right? And, I was talking about Duolingo the last couple of days to try and get some calls into Duocon, and then it sold off. And then I was looking at calls yesterday afternoon. The 300s looked interesting. I think they were 90 cents, then $1. I'm like, let me just wait. And then sure enough, it's gapping here in the pre-market. I don't know what those 300s are. Maybe they're gonna be $1.50. I'll probably just wait for the first half hour of trading to see what that looks like. I might get some doing Duolingo lotto calls. And then other names, Nike reports earnings September 30th, just been disappointing. But maybe now that it's pulled back a little bit, might be an opportunity to get some 80s or so for October to play for earnings. Maybe profit premium build into earnings and be able to lock some of those in to cover costs and ride the rest into earnings. That might be the play. I'm still looking at pool like some of the other names. RH yesterday too, with the Fed statement came out. It's like everybody's buying up all these names that might benefit from lower rates, and then it gave back the gains. Pool down nearly 1.5%, despite being at 335 at like 2:45 in the afternoon. Still eyeing those. I think that's it, folks. Let's have a great day. I'll be back on audio later. Oh, Intel, Nvidia, right? Remarkable stuff. I mean, gosh, when I had Intel calls, did I have it in October of last year? Whenever is the new CEO? Maybe it was February, March. I forget when I had them, but it's like one of those names that you look back on. It's similar to United Healthcare, right? Some of the parts of the business deserves a heck of a lot higher valuation. I remember doing the rants back when it was in the 20s and the 18s. I'm like, it's a higher. It deserves a much higher valuation. Just a matter of when it happens, right? And then you had the U.S. government stake situation. And now you have this morning NVIDIA announcing a $5 billion investment. Well, I don't know the exact nuts and bolts of it, but it's a $120 billion company. So I don't know what that stake looks like in regards to percentage wise, but to me, it's like just a good sign regardless. It could have been a $1 billion stake, right? Just a monster move here. I mean, look, I was looking earlier this morning, like the 25 calls, 26 calls, 20 cents. I mean, they're going to be some serious multi-baggers, but anyway, that probably bodes well for the semi space. ASML too. Anybody's been watching that every morning? It seems the last 2 mornings gapping, and yesterday did the gap and then sold off, and then this close at 872. It's at 9:30 here this morning. Interesting stuff. All right, let's have a great day. 2 minutes to open. I'll be back. Rock and roll.